So ICT came out with a new PDA. So out of his 83 or something crazy that he has, there's one more that hasn't been released to the public. And that PDA made me money today. So I'm going to go over today's price action, the trades that I took, how I incorporated this new PDA. It's called the suspension block, and how it allowed me to prevent price from hitting my stop loss and just trying to generate maximum profit. So let's jump right into it. Let's jump right into the morning. I think today's morning session was pretty eventful, and I think there's something that all of us can learn from it. So let's dive right in. Let's start off with the RTH view of the chart, which is regular trading hours. We don't see what's happening from 4:14 to 9:30. Okay, and you can see here from 4:14 to 9:30, there is a gap, and this is what we call the RTH gap. There's one that almost happens every single day. Sometimes price opens up and closes on the exact same amount. Again, very rare. This is less and this is more, but usually there is a gap. And today there was a bearish opening RTH gap of 96 points. So what does this mean? It means that price has a tendency to fill in this gap. Gaps like this are like volumes. Statistically speaking, there's a 70% chance that the mean threshold of the RTH gap will get filled in the first 30 minutes. So use that to your advantage. And if you play the proper PDAs with that mindset and frame, you will make money. But all in all, you can see what price did is it kind of pushed lower. That's the Judas swing. It took out some minor sell side liquidity. It pushed higher to mean threshold. And then what price did is, it pushed to the upside. But let's switch back to electronic trading hours. I just want to show all of you the RTH gap. So what price did is and let me just add some lipstick on my trade. It pushed lower. It took out the lows from 816. It pushed higher. It created its first presentation fair value gap. And you can see here, nested within it from yesterday is Tuesday's New York first presentation fair value gap. So I really like this area. And what price that is, it pushed to the upside. It didn't give me an opportunity to take this long. It traded to today's new day opening gap, which is this upper red bar here. You can see it rejected it a couple of times. It pushed lower, grabbed what? 930 sell side liquidity. Everyone that went long, they probably thought that's a great area for a stop loss. Again, NQ with Savage. I took it. It created a SIBI to the downside. It got inverted, and it got inverted and respected at 1030 news. So you can see 1030, we had red folder news. It pushed lower, and then it kind of closed on a higher note. It closed within yesterday's first presentation fair value gap, today's upper half first presentation fair value gap. And right when it started pushing higher, I did take a long. When it comes to my stop loss placement, it was below today's first presentation fair value gap. It was below the mean thresholds. It was below the mean thresholds of both of these candles. And then price popped higher, pulled back lower to the first presentation, and then pushed away from it. And my target was the upper half of this green box here, which is the RTH high. So it's where price closed at yesterday at 414. Okay, now let's do a bit of just price action review before we go into the second trade here. Price from late New York pushed higher during lunch. It created relative equal lows. I thought it would come down lower, tag them, and push higher. It didn't. It continued grinding higher. It created more relative equal lows here around lunch to noon. Again, left them. I thought they would go higher. I did. I don't have it annotated here, but I did try shorting from the 130 first presentation fair value gap. Again, the very first fair value gap that forms after 130, it's a bit weighted versus the other ones. I did take a short somewhere around here with the stop loss right there. Once price pushed lower, it was like a 6-1. So once price pushed lower, I had my stop loss at break even. Unfortunately, created these relative equal lows. I got pretty happy, and then it just kind of punched higher. So I got out of break even. Thank God that I moved my stop loss, because I would have been torn by these, this upward momentum here. So once price started pushing to the upside, you can see here, it pushed higher and it stopped right before a very key level, which is, so it stopped at a very key level, 25.011. And if you kind of scrub your chart all the way to the left here, right? The reason why I had this marked and denoted is last time we had all-time highs around the 23rd of September. You can see what price did here. It created these relative equal highs right here. So there's a lot of buy-side liquidity sitting here. And this is an area where price wants to gravitate to, because it's a drawn liquidity. It's too smooth, and this price has to be made jagged. So when I show you my Top Step account, you will see me partialing out at this level, but ultimately I was holding to all-time highs, and I was actually holding to 25, 100, which is all the way up here. I really thought if price breaks up, it's just going to continue rocketing up, but it didn't do that. But all in all, let's talk about the second trade here, and we'll talk about ICT's new PD array and how I used it. The price pushed up higher. It didn't grab this level of 25,011. It pushed lower. It respected yesterday's first presentation, or yesterday's afternoon first presentation, and today's afternoon first presentation fair value gap. Once it pushed higher, this is when I think bought 2 or 3 contracts and I started scaling in. And you can see here, it broke past this level, this area right here. It's called a BPR, a balanced price range. It ultimately means when you have 2 fair value gaps kind of lapping over one another, this area is considered balanced and price shouldn't come back down here once it breaks it. So again, I had my stop loss, I think, moved the low of this bearish candle, this being my bullish order block. Price grinded higher. It took out the first level. I partialed out roughly 50% of my position, pushed down lower, and then it created this very special fair value gap. And you can see here, it is called a suspension block. And ultimately what a suspension block is, it's a weighted fair value gap. It's stronger than the regular one from my understanding. And the way you denote it is there's a gap below it and above it. The way you draw it is you draw it from this candle to that candle, including the gaps, and this middle candle is suspended. Hence, it's called a suspension block. So I leveraged it, and when we created to the upside and we kind of started to, push higher, I saw it and I'm like, let me put my stop loss below the suspension block, and let's see if ICT's new fair value gap does hold its weight. So you can see what price did is it pushed lower, respected it, and right there I was very optimistic that we're going to push higher. But you can see price kind of dilly-dally between this bearish SIBI and this bullish suspension block. You can see how many times it respected the downside, and then eventually it broke up higher. It created another fair value gap, it retested, it pushed higher, and then I took out 80% of my position at the all-time highs. Once I took partials at all-time highs, I did trail my stop loss below this low right here, which is technically relative equal lows. It's not the best area for a stop loss, but I was anticipating that once price breaks this level, it's going to skyrocket to the upside. It didn't do that. I did get stopped out, and you can see that right. So here is a screenshot of my Top Step account. This is where I got in at, and this is kind of where I managed to get the majority of my position out. So it was roughly 45 handle position, nothing crazy, but it managed to bring me roughly $2,000 across my 5 Top Step X accounts, plus the ones from Funded Next that are copying it as well. So all in all, pretty good day. Try to incorporate the suspension block in your trading when you do see one. See how price is respecting it, and if it's something that you kind of want to add in your trading arsenal. But other than that, that's it for today's trade. Nice, short, and simple. If you guys enjoyed this video, feel free to drop a like and to drop a comment. I really appreciate that. If you guys are interested in any discounts, I do have a couple of them linked below with affiliates that I'm working with to help you guys have the lowest prices across the trading tools that we all use. And last but not least, tomorrow is the day before NFP, and on Friday is NFP. So do watch out for those 2 days. Price can be a bit fickle. Don't trade heavy. Trade your A+ setups. Let's lock in for the last 2 days. Okay, it's a new month. If you guys had a bad month, it's a new month. It's October, fresh start. I think there's a lot of opportunity in Uptober, as they call it, and in November before we all kind of take a break in December. And without ado, stay safe, take care, and I'll catch you guys soon. Bye for now.